Hello again, fellow BeachBum traders. We hope that you had a great trading week last week. We hope that you found our weekly game plan from last week helpful to you in your trading. Please let us know if you found our weekly game plan from last week helpful to you in the comments below. And please let us know how your trading went this week. Good or bad, what did you learn? How can we improve our weekly game plans to help you succeed in your trading? Now let's get started preparing our game plan for next week. Hello again, fellow BeachBum traders, and happy Halloween. Hopefully you got more treats than tricks this past week. We had a great week. It was a great week of trading. I hope that it was for you all as well. Please let us know in the comments below how your trading went this past week, the last week of October, and for the month of October. Hopefully also October was a great week. As we've been planning for a while, the dip in the late September through mid-October and then the upswing in late October turned out quite well. And hopefully you all did well as well. Now, welcome to November. And again, happy Halloween. We've been talking for quite some time about an upcoming potential taper tantrum. So are you ready for a taper tantrum? Should we get one? We'll talk about what is a taper tantrum, what does that mean, and might we expect one? In a second, I will jump to this Investopedia article that I'll leave this link in the description box below that defines and describes what past taper tantrums are, why do they occur, what does it all really mean, and the important dates and times for a potential taper tantrum to remember is Wednesday, this November 3rd. At 2 p.m. we've got the FOMC statement and their interest rate decision, and then at 3:30 we have the Fed Chairman Powell's press conference. And I would expect, and we'll talk about this in more detail, even if we don't get a taper tantrum per se, I think we will see elevated volatility around this statement and press conference, as has often happened in the past. Even though we know they've been broadcasting for quite a while, everyone expects the announcement of the tapering to occur at this November meeting. And again, we'll talk in more detail some of the economic data that supports that thesis. So, what is a taper tantrum? Well, again, here in this article in Investopedia, it describes what happened in 2013 when the Fed announced that they were going to taper. They were going to reduce their quantitative indices or easing, reduce the pace of purchasing of bonds, and the money that they were pumping into the economy. So the key takeaways is originally this occurred in 2013, caused a spike in Treasury yields, so a drop in prices, due to the putting on the brakes on quantitative easing, or QE as it often is referred to. The main worry was fears that the market would collapse. So again, we had this tantrum, and people bailed out of the market. And you could see the other key takeaway was it was unjustified. The market recovered quickly and then continued to go up. So again, you can read in more detail, why did this occur? Why did they start quantitative easing? Why did they then, reduce the purchasing? And why did this cause a taper tantrum? So I would recommend that you read this article in more detail and understand, what's a taper tantrum? Might we have one again? What caused it? What's the result? The net result is, in the long run, it did not negatively impact the stock market. So we want to be ready for a tantrum, for a shock, and we'll talk about how we can hedge against that kind of shock. But in the long run, we're not looking at a recession. We're not looking at, market crash. This is going to be a short-term event. So we want to prepare for it. protect ourselves against such a tantrum should it occur, and be ready to react. So, and again, why didn't the market fall? They're just reducing their purchasing because essentially the economy is doing, okay to well. It's recovering, and ultimately that will cause an increase in the stock markets and the economy. So again, we'll talk about this in more detail, but the key is let's be ready for it. Let's protect ourselves against any potential negative impacts and be ready to take advantage for the recovery. Since we're now in the going into the first week of November for next week's trading week, as we typically do at the beginning of each month, let's look at, what does that mean? What is the typical market conditions in the month of November? So I'm on this Investopedia article that, again, we look at each month, and I will put this link in the description box below. And we can see, the month of November is typically up from October. So as we've talked about and looked at the past couple months, August, September tend to be, some of the worst months, the decline into potentially the middle of October, and this seems to be historically playing out this year as well. So we saw a nice upturn the end of October, and then we can expect a continued upturn into November and into the end of December. And again, we'll talk about the theory of the Santa rally once we get closer to the holidays and January and what impact that has. I'll just quickly zoom in so you can see the numbers. Here's August, September down, October, November 150%, December 160%. So historically, we're going into a very bullish season of the markets, which is great. Hopefully you're positioned well to take advantage of this upturn in the market, get some nice swings into the end of the year, hopefully, and we'll have a great end of 2021 and going into 2022. So let's look at how things look right now. Okay, now I'm on the FinViz homepage, and you can find our affiliate link to FinViz in the description box below. Just take a quick look at how the markets ended on Friday, the 29th. We can see particularly at the end of the day, all the markets pushed up and closed at new all-time highs. The S&P and NASDAQ closed at new all-time highs on Friday. Another thing I wanted to point out as a factor that we're going to be playing in our watch list is the disappointing earnings of Apple and Amazon. And the previous day, Facebook's announcements, they were down like 4% and then it bounced back. But with Apple and Amazon both down big, that didn't seem to really sink into either the NASDAQ or the FANG-D, which we'll talk about that. We went long the FANG-D this week. And I don't think those have completely been consumed by the market, had their effect. So we'll see how that goes. We can see a bunch of new highs, but more decliners. So there's some undercurrents going on in the market that we'll talk about. Otherwise, just very quickly, we can see consumer spending, high inflation. So when we talk about the Fed announcement, the data supporting their tapering, there are many indications of continuing high inflation. Again, more people are coming out and saying, oh, it's not as transitory as they had been saying. It's high, it's going to persist, it's having an impact. We'll talk about what that means in terms of our positioning in stocks. We see the bond market, Treasuries actually declined, which is surprising. Again, when we go into a tapering, we'll talk about this. If we got a taper tantrum, that would mean that yields would spike up and prices would drop, and how we're going to play that. So then you can also see, the market shrugged off the downbeat Apple and Amazon earnings. So I think as that sinks in, that may have more of an impact on the tech sector, the NASDAQ and the FANG-D. Oil initially went up to about 85 this week, and then it declined. So we'll talk about that. We scalped drip again. We scalped oil using drip again, made some money. It's great. Now people are talking about oil in the range of 100 to 115. And while they were talking about that, $100 plus oil, oil was going down. So we'll talk about how we can play that. Nat gas has been pretty flat. We see a current recent spike, but again, it briefly went above 6 and then declined again. Gold had gotten up over 1800, briefly declined. We'll look at that in the futures in just a second. So again, this is all information you can find on the home page on FinViz. It's a nice quick overview. And you can see as during the day you can see how the market's trending, so that's helpful as well. Okay, now I'm on the futures tab in FinViz, and we can see all the indices were high, and the S&P and NASDAQ hit new all-time highs. We can see how extended the futures are looking. We posted in last week's game plan, and we'll talk about in more detail, that we shorted the S&P using SPXU. We may choose to double down on that short, or we may choose to short the NASDAQ with SQQQ or the Dow with SDOW. Obviously, the NASDAQ looks pretty extended, and based on events and how things pan out, if you're looking for a hedge, again, for the taper tantrum or just for a retracement, if you want to hedge and protect your portfolio a bit, any of these shorts would be a way to do that. Again, SDOW on the Dow, SPXU on the S&P 500, SQQQ on the NASDAQ. Russell is still trying, but we can see it is failing to hit new all-time highs. We'll see how small caps do towards the end of the year. We can see the VIX was declining, and then it kind of went up into the 17 range for a little while, and then now it's sitting low 16s. If we get an opportunity to long the VIX before the Fed announcement on the 3rd, that would be great. We'll jump on that with UVXY again. If not, then we'll wait for a potential spike on the taper tantrum in the VIX and short the VIX with SVXY. Oil, as we talked about, had pushed up in the 85 range and then declined. We could see gas dropped off. The inventories in oil was higher and increased higher than expected, and that's potentially part of the decline. Also, there's continuing discussions now with Iran about their nuclear energy thing, and that may potentially, I think people are thinking that may increase supply as well. But they're still talking about oil going to 100 to 115. So we'll see. If it pushes back up again, hits a new all-time high, we'll scalp it again with drip. If nat gas happens to spike up, we can short that with cold. There was talk about an El Nino in the Pacific causing a colder than usual winter, which people say that should cause an increase in nat gas prices. So if that takes a footing and nat gas prices spike, then we'll scalp nat gas with cold again. Like I said, gold hit above 1800. It's trying to push up, but it's just oscillating back and forth. Silver had a nice run for a little while, and then it trailed off as well, as did many of the precious metals. See treasuries, the prices kind of started going up, and then they're kind of hovering right now. So again, we'll see what happens when the Fed announces they're tapering. If we have a tantrum, we'd expect a spike in yields, which would cause a drop in price, and we'll talk how we'll play that when we get to our watch list in a few minutes. Let's take a real quick look at the indices in detail. So I brought up the chart for SPY in FinViz. We can see, it's high. It hasn't really hit the top trend line of this channel, but it's now running quite a bit above its 50 SMA. So the NASDAQ, QQQ, again, they're all going to look similar. They're, high. They haven't hit the upper trend line of their channel yet, so we could have more upside. That's very, very possible. It may hit the top of that trend line and bounce down as it has, as we can see. It's done that in the past. It goes to the top of the channel, bounces down, goes to the bottom of the channel, bounces up. So seems to be a reoccurring theme. So it's something that we can take advantage of. Dow similarly not quite as extended. It's more muted. The channel is narrower. And then VIX. Let's look at the VIX, and then I'll go back to the IWM at VX in FinBiz. So again, we can see, it jumped up and now it's kind of hovering. Let's look at the Russell IWM just quickly. So again, it broke out of that trend line of its channel, but then it's just kind of hovering at the top of that trend line. So we can see this is a narrowing channel, so potentially might set up for a breakout in the future, but right now it's just hovering in there. If we just quickly look at the biotech indices, XBI, S&P biotech. Nothing exciting. It's just kind of hovering in the middle of its channel near the bottom. IBB. And very similar. Nothing exciting right now in biotechs, in my opinion. So that's a quick look at the indices. Now let's see what other market information we can find in the Webull's market tab. Just wanted to share with you another great resource. I don't know if you all have seen this on CNBC or if you're already getting these CNBC Investing Club emails from Jim Cramer, but I'll put a link to their sign up page in the description box below. I just wanted to use this as an opportunity to highlight some of the economic data from last week. I think these emails are great. He posts their game plan for the week. He posts their trades before they make them for his charitable trust. I've been watching Jim Cramer for a long time. It's another source of data. And the more sources, different opinions, different sources of data that you take in and then make your own decisions. We're not financial advisors, etc. But again, I think the more input data that you have to form your own opinions, to make your own trades, is great. So some of the things that he put out in this particular email is a recap of the economic data from last week, which is great, and I'll go over my interpretation of that in a minute. But we can see that home sales were above expected. On Wednesday, durable goods was better than expected. So consumption, then we saw core capital goods outpacing expectations. So again, spending, spending is above expectations. And then we got a GDP disappointing. So spending is increasing, it's over expectations, but economic growth is below expectations. And they cited the Delta variant, and they cited supply chain. We're going to keep hearing about supply chain. We're going to talk about some impacts of that going forward. We saw home sales missing expectations. Jobless claims were lower than expected, positive for the economy, and also again reinforces if the jobless rate is approaching the Fed's target, they're more likely to taper sooner, more quickly, and raise interest rates more quickly because they're meeting their targets. So again, this is more data that supports our thesis that a tapering is coming soon, as are interest rate hikes. So Then Friday, we got personal income spending better than expected, disposable income. So all of these things, and PCE again was pretty in line, a little bit below. So again, I think Jim Cramer's, the CNBC Investing Club emails are great, give you a lot of information quickly. He also covers the earnings upcoming, and we'll talk about that in a minute as well, the earnings calendar for this week. So, and also the economic summary of the economic data for next week. So again, I think this is great. I'll put a link to the site where you can sign up. You just put in your email. It's free. You get 3, 4, 5. He's been very active. He seems to really enjoy it. It's good information. You take it in, use it as you are able. So I hope that helps. Okay, I just wanted to also quickly add our interpretation of some of the economic data from last week and talk about the upcoming economic data. As usual, I'll include this link to the economic calendar on FinViz or on investing.com, where you can see the results from the previous week as well as the calendar for the next week. And again, just some of the highlights is from Monday. Again, they reported this El Nino forming in the Pacific. They think that means it's going to be a colder than normal or colder than average winter. There was an initial spike in nat gas prices, but then it settled down. We'll see if that causes an increase in nat gas prices. If so, we'll look at shorting it again with coal. Cold, C-O-L-D. Oil hit hit a high of 85.41 on Monday and then declined. We went long drip and scalped oil again, as we posted on the comments from last week's game plan, and I'll put a link to last week's game plan. You can see this there. Also, we posted these trades on our Twitter feed, on our Facebook page. I will put links to those other social media sites for BeachBum Trading in the description box, and you can follow along on whatever social media site you prefer. And then you can get our entries, and typically we put our exits in the comments for the game plan, sometimes on the social media sites. But again, I think it's each person's situation and goals in their trading as to how you exit, when do you take profits, how much do you take, etc. You'll also see we went long FANG D, which is the short on the FANG index. It includes all the big FANGs, Apple, Amazon, Google. It also includes Tesla, and it also includes some of the Chinese big techs like Alibaba, Baidu, etc. So we're still holding that. It hasn't. It declined a little bit. We're expecting, a drop in the FANGs. Apple, Amazon had poorer than expected earnings. Facebook had a drop, but then Tesla had a run. Google was up. So we'll just wait for that, and that's a hedge on the FANGs. So again, we posted that. Tuesday, we saw consumer sentiment was up. New home sales were up. So that's positive from a consumer standpoint. Then on Wednesday, we saw crude oil inventories were up. So another nice thing about this inventory investing.com calendar is you can see, if we look at Wednesday, we look at the oil inventories, you can see the forecast amount and then the actual amounts and the previous amount. So we can see, and they highlighted red, so it's a negative. We can see, okay, distillate, so gas as well was a negative factor, and we believe that's what caused the decline in oil prices. Was inventories were up, gasoline inventories were down. On Thursday, we saw jobless claims hit a post-pandemic low, but GDP was disappointing. Consumption was robust. Consumer consumption, we also saw company spending is up. Price index moderated, but it's still hot. So we still got inflation. So we got spending, we've got inflation, And then we saw nat gas storage was higher. So again, that's a downward pressure on nat gas. Their storage is up, so supply's up. Demand is not increased yet, but we'll see if that triggers. Then on Friday, we saw consumer spending rising. So again, with spending and inflation stays hot. So again, all indications are inflation's hotter than expected. It's not transitory. It's going to continue. Those are all the signals the economic data is giving us. So next week, again, the important factor, and again, to see next week in investing.com, you just click next week, you scroll down and see all the details on a daily basis. The key is the FOMC meeting on Wednesday. So also, just while I'm here in investing.com, let's talk about the earnings calendar. You can get to this earnings calendar very easily. Market, stocks, earnings calendar. And then we can see the past week, but what we want to see is next week. I just want to highlight a few again in Jim Cramer's. There's just tons of earnings this week. So, and it's a diverse selection. So I just want to highlight a few. You could see some in Jim Cramer's Investing Club email as well. Definitely go through this calendar. We'll also look at an abbreviated version, the market screen in Webull. But one of the notable earnings that we're going to be focusing on is semiconductors. Is on Monday, we've got a ON semi reporting before market open. Then we've got NXP semi reporting NXPI supporting aftermarket. The SOX index on semiconductors was running very high on Friday. The short on the semiconductors is SOXS. The long is SOXS, or SOXL long, SOXS short. We're looking to short semiconductors when it peaks and comes down. So that would be when SOXL peaks and turns down. SOXS bottoms, turns up. There's all this talk about the shortage. Well, at some point, that's going to max out, and we also believe that people are probably, and there's been discussion that they're double ordering, triple ordering. So demand is exceedingly high right now, and they're probably going to oversupply semiconductors, very cyclical, and we want to take advantage of that swing. So it's hitting a top, so it's going to swing down. We want to take advantage of that. When it bottoms, swings up, we'll take advantage of that. So we're going to be particularly focusing on the semiconductors. But again, based on your positions, stocks you're in, what sectors, definitely take a look at the earnings calendar, see what earnings, when are they going to happen, listen to the reaction to those earnings, how does it impact your stocks, the sectors that you're in. Sympathy plays, similar stocks will tend to be affected by the earnings of their competitors, by the sector, etc. So we hope that all helps. Again, another place to see earnings information is on the market screen in Webull. So here's the markets tab in Webull. We just premiered a video today that you can now see how to use the market screen in Webull, and we go over this in detail. Here's another example of how we actually use this is on the calendar tab. If you select earnings, you can get an abbreviated version of the earnings calendar for the next few days, and you can quickly and easily see, is it a before market open or after market close earnings, what the estimate, market value, etc. So again, this is a little more abbreviated than the long list on investing.com, and if you're watching this for other data, it's easy to see. So we hope that helps. But again, earnings is going to be very important. You need to listen, who's reporting, what's their results and what impact is that going to have on your stocks, sectors, sympathy plays, etc. It's going to be key for this week. Okay, again, just a real quick review of the Markets tab data in Webull. Again, this is the online version, the browser version of Webull. You can find our affiliate link to Webull included in the description box below. You can get 2 or more free stocks by getting Webull. And again, we just put out premiered a video in much more detail about how to use this market screen. So please see this how to use the market screen in Webull video. I'll put a link in the description box below to that. I'm just going to go through it very quickly for this week's data, but again, then you can use this video to go into much more detail on your own. So again, we can see the indices. We already know they were all up. Advancers, decliners, the histogram, you can see it's kind of balanced. You know, we've got quite a few advancers and decliners of small percentage. So this histogram helps us see that there's a tug of war, right? Advancers and decliners. We can see the net inflows for the NASDAQ and NYSE, and we see this big spike again at the end of the day on the NASDAQ, which we have seen quite often. Then we see a outflow on the NYSE. So at the very end of the day, money flowed into tech. That will impact the S&P 500 and the NASDAQ, and outflowed on the New York Stock Exchange. So we can get a feel for that. Again, news. If we look at the after hours from Friday, just very quickly, see if we see any trends. Don't see a strong trend. It looks pretty mixed. If we see losers, again, it seems pretty mixed. It's probably very earnings related. Good earnings get a positive reaction. Bad earnings get a negative reaction. Best performing industries. If I click all, we can see them all on a page. And we'll talk about this theme again, the renewable energy. We had Biden's press conference talking about this, so we had a little bit of a surge in solar, renewable energy, EVs, etc. So we still see autos got a little bit of an upward trend. And then we see, hardware, software. Again, that's probably more earnings related than trend related. But again, we'll talk about that theme: solar, renewable energy, EVs, etc. And again, this is a nice view. You hit the all. You could see all the industries all at once. We could see the ETFs for the markets, betting up on the Dow, up on the S&P. Up on the NASDAQ. Again, you can hit the all, and we can quickly see everything else. No, they're up on the Russell. That's good. VIX is mostly up, so again, elevated VIX. So we can quickly flip the tabs here to see the ETFs by industry. See industrials up, communications up a bit, healthcare up a bit, real estate down, financial services down, energy down. So it seems like short-term energy may have peaked, waiting for more demand. We see utilities was down, and again, that's going to be impacted by bond yields. As bond yields go up, their dividends become less attractive. So. And the commodities, we can see people are still betting up on oil, right? That's what the commodity ETFs are telling us. We still see up on cotton, coffee, and platinum. And then bonds, 20-year, 25-year up, and Forex. So I hope that all helps. Again, you can get a lot more detailed information via our video on how to use this Markets tab. There's a lot more information here. Hopefully that helps you be able to use it as effectively for your trading as possible. Okay, now let's get to our watch list updates for our weekly game plan for the week of November 1st through November 5th. And I know we presented a lot of information. I hope that you find all this analysis of the markets and the futures all helpful to you. If so, please smash the like button. It will help the YouTube algorithm share this information with more of your fellow traders. If you're not already subscribed, we hope that you'll consider subscribing to our BeachBum trading community, to our YouTube channel, and please share this with your fellow traders. Again, a lot of information. We have a lot of updates to our watch list, so we'll go through them very quickly. A number of them have been on our watch list before. We've talked about them before, but we'll go through it, all the updates. So APT, we're going to add APT to our watch list. APT is a building supply and also a personal protective equipment company out of Canada. And they are profitable. They have earnings on the 5th. They've been beaten down because masks kind of got out of favor when all the mask mandates got dropped and people started reopening and traveling. This company got beat down pretty bad. But in addition to doing PPE, they also do like building supplies and things like that. So we're kind of thinking that this is a potential turnaround play. It looks like it's got pretty good support around the 596 type area. We'll look at it in the stock screen. And just a second, you can see how to add a ticker in the watch list, and then we can jump over to the stock screen. I'll select it. We'll go to the 5-day, and we can see it's kind of pivot point around 6. So I will go through some of our others on the stock screen for our watch list. We're going to remove DDD from the watch list. It's kind of run up. ARK has been buying DDD, and it's kind of run up, and we're not going to chase it. So for now, we'll remove DDD. We'll come back if it drops down to that 25-ish level. We'll take another look at it again. DPW, we're going to leave on the watch list. We're still waiting for it to kind of come down to that 220. We talked about this last week. Why? It's a potential Bitcoin play. And again, we'd like to see it come back down to this 220 area before we jump it back into that. Congratulations to anyone who took the scalp again this week on Drip that we posted in the comments. It's another profitable scalp for a quick 3-day trade, which equated to a monthly ROI of about 15%. So, which is great. We're going to keep doing this as long as oil keeps pushing up to new highs. If it peaks and starts to turn down, we're going to scalp it with Drip as long as that trade plays out. So congratulations to all of our fellow BeachBum traders who have been making money scalping Drip with us. So E-Man, we're going to take off of the watch list. As you'll see, it already ran up on the Megaverse hype. We're not going to chase it. Anything related to the Metaverse got hyped up, ran. This was a little surprising because Facebook, this major competitors coming in heavily into that market, and yet these guys ran, even though they're going to be facing major competition. There's some speculation that some of these guys might be suppliers to Oculus, Facebook, etc., but I think it was a hype boost, and in the future, one of these days, I'll talk about, or I'll make a video and we'll talk in more detail about the hype cycle and how we can play that both for short and long-term investments. Fang D, as we posted in the comments in last week's game plan, we went long Fang D, which is a short on the Fang index. It's a leveraged ETF, negative inverse on the Fangs. We posted the link to their holdings. It includes things like Apple, Amazon, which were down, and it did not really react to that yet, and also some Chinese tech stocks. So if they get further crackdowns in China tech stocks, we would expect Fang D to go back up. So we put Fang U in here. We've got a number of these where the leveraged ETFs, it's often easier to find the bottom on them by looking at their inverse and finding the top. So Fang U is the inverse of Fang D. So again, we're already long Fang U, or we're long Fang D. Cold is the ETF on shorting nat gas. We've talked about it a number of times. If nat gas spikes again, we'll go long cold. It has not really done so. So we're waiting for a bottom again in cold to go long cold again to short nat gas. LMFA, we're going to take off the watch list for this week. We did a previous due diligence video that you can see. We'd recommend take a look at that due diligence video, but it's run up a bit from where we'd like to buy it, so we're going to take it off and let it come back down for a while, and then we'll approach LMFA again when it comes back down. Another exciting one that we found when doing our FinViz screeners is an old friend, LTC, which is a REIT on hospitals and nursing facilities. And a couple weeks ago we went long LTC. It topped out. We made a very nice profit on it. It pays dividends. It's a monthly dividend paying REIT. And again, you can see it had a major decline, and it's approaching its support level again, which is great. We're probably going to go long LTC very, very soon with some decent size and make a nice profit on it again. We think their reported poorer than normal earnings was due to the pandemic. It's non-payment of rents. Again, there was deference of rents, foreclosures, etc., which have now all expired. So I think that issue will have been resolved, and this will be a nice turnaround play. So add LTC to your watch list, and we're going to be long. We'll post in the comments when we go long LTC, but very, very soon. NUS is one we just found and added to the watch list, and right after this it's New Skin Enterprises. Just found them doing a FinViz screen, and I was not familiar with them, so we just did a due diligence video. And what I'm going to do is I'm going to put that video right here after I finish talking about it in the watch list, so that you will get the benefit of that due diligence if you wish. We will be publishing that as a standalone due diligence video on NUS as soon as we're able, but we wanted you, since you're watching our game plan, to benefit from that due diligence if you choose to. If you don't want to watch the detailed due diligence, you can skip ahead to where you see the next disclaimer slide, and then where the watch list updates picks up again. So you can skip ahead if you don't want to watch that due diligence. I would recommend that you do, but that's fine. And the conclusion is, I don't want to ruin it, but so I'll wait a second, and we'll put in that due diligence, and then I'll give you the conclusion if you happen to skip ahead. Hello again, fellow BeachBum traders. We wanted to quickly share with you going through a quick due diligence on a new company, a new stock that we found while we were going in our FinViz screeners, preparing our weekly game plan, our watch list for our weekly game plan this week. And we wanted to see if NUS is the ticker, Nu Skin Enterprises. Is this a stock that we want to buy now? Is it something we want to put on our watch list for this week? This is as of October 31st, 2021. So we're going to go through our normal due diligence process, and we're going to add some additional information for you in this one. So please stick around to the end. Thank you for taking the time to join us for this video, and we'll get started. As you can see in the background, we've got the home page for Nu Skin Enterprises, and we'll go through some of their home page, but just very briefly, who are they? They're a U.S. company that develops and distributes personal care wellness products worldwide. They've got several brands: ageLOC, it's spas, skin treatments, cleansers, etc. So it's kind of in the personal care realm, spa-oriented, salon-oriented. They have nutritional products, weight management, etc. So pretty diverse. They do operate retail stores in China, and we can talk about what potential impact that may have in the current scenario. And then again, we can see some brands: Nu Skin, Pharmanex, and ageLOC. They're based out of Utah, so again, and they've been around for a while. So if we just quickly take a look at their homepage, we can see some of their products. Again, spa treatment, Nu Skin, ageLOC, Pharmanex, vitamin supplements. You can see sales, etc. Just to kind of get a feel for what does the company do? Do they have a professional website? And then once we get to the bottom, we can see some of their social media sites. It's kind of interesting. They're in Facebook, Instagram, YouTube, but they're not on like Twitter. So again, just a real quick look. I usually get to their home page from the link in their company name off of the finviz.com quote, which we'll see in a minute. We'll go through their chart in Finviz, etc. Do our normal due diligence via Finviz, but again, I usually just right click on the company name and then go to their home page from there, so I don't have to search for it. So hopefully that helps, and we'll dig a little deeper. Okay, now I'm on the quote screen for Finviz for NUS for Nu Skin Enterprises. You can get there just by typing NUS in the search bar. We can see the chart, the current chart for NUS, and we can kind of see why it popped up in the Finviz screener. It is very near its 52-week low, and it looks pretty flat at this point. So when I saw this chart in the preview in the screener, I said, I wasn't familiar with this company. It looked interesting, so I wanted to dig a little deeper. If we quickly look at the weekly chart to see if it's got some range for our normal desired risk reward, we'd like to see a factor of 2 for reward to risk. Well, initially, the top here is only about 60, so we've got about a $20 reward, and we've got about a $20 risk. So that doesn't look so great initially, but if we go out to the monthly, we'll see it has a much larger range. So in the past, it's been much higher. It's been in the 80s, and in the distant past, it's been in the 130s, as high as 140. So said, that looks interesting. It's got some potential. Let's again dig a little deeper. If we go back to the weekly just quickly, we can also see that it looks like it's hit a pretty stable support line here. And we can also see a couple trends that we'll talk about more. It looks like it kind of bottomed out in February of 21. Declined pretty severely, then it went up into the June-July period and has been trailing down since then. We also see the bottom, again, these are pandemic-related movements. There's the pandemic low, it came back up through early 2021, then it dropped off, and then it rose into early summer of 2021, has been dropping off since. I think we'll see very similar things in related products, cosmetics, ultra beauty, Coty, etc. So what I think is going on here is in the initial reopening, a lot of people bought these types of personal care products, cosmetics, etc., did all their buying, and then throughout this summer, there hasn't been as much buying, so it's kind of flattened. Another point to note will become important in our decision is they have earnings on November 3rd. So it'll be very interesting. Some of the cosmetic companies reported poor earnings this quarter. Again, it was summer. I think people bought their cosmetics at the initial reopening, did not buy a lot in summer, and now we're looking towards Christmas. One of my hypothesis is that people may be buying these products more for Christmas if there is not supply chain issues. So those are some of the questions we want to answer. Are there potential supply chain issues? Is this a good holiday purchase or not? Now let's dig into our normal due diligence in FinViz, and we'll possibly use this as an example in a deeper dive on how to do due diligence in FinViz. But here's an example of some of the things we look at. One of the things that was initially attractive about Nu Skin was, hey, they make a lot of money. They've got $2 billion, almost $3 billion in sales, $236 million in income. It's positive. They're a big company and they're making a lot of money, or at least they have in the past. They also pay a 4% or 3.8% dividend. So hey, here's a good dividend stock that is paying a dividend higher than the Fed's target inflation of 2%. So maybe this is a great one for a long-term investment that pays a dividend. Do we see any red flags, any negatives? So they got a little bit of debt, it's not excessive. Shares outstanding and float are pretty in line, so we don't really expect a massive offering. Their ratios look okay. Again, I don't see any major red flags in here, and again, it's kind of down in its 52-week low. So again, in this initial look at their metrics, we don't see any major red flags here in FinViz. So we can scroll down, see news, see if there's any red green type of things based on news. Don't see anything again. We can go farther back. Okay, so back in February 21 we saw that low. Well, what was that low? Well, that was their reporting, their earnings. They raised the dividend, they had a profit jump, and look, and then it went down. So something was said in their earnings call. It missed expectations in some way, and it went down. So we can hear their description, then we can look at their financial statements here in FinViz. Again, we can see their EPS is increasing. Their revenue has been kind of flat, but a small increase. So again, it looks good. They're making money. It's been increasing. Let's look at the quarterly real quick. And again, revenue, okay, so there was a slight dip in March of 2021, and earnings, same way. There was a slight dip, but then it seems to be recovering. So again, these indications seem like that maybe this is a great recovery play, good swing. So we'll dig a little deeper, but from the initial look in FinViz, it looks like it's worth some further due diligence and further consideration. Okay, let's do our normal due diligence using Seeking Alpha. I'm on Seeking Alpha. You can enter again NUS in the search bar up at the top, or you can change NUS after the symbol in the URL. And I'll put all these URLs in the description box below for quick access. You can also find our affiliate link to FinViz, and we're going to share with you a new tool that we are going to use going forward on due diligence in a few minutes, so stick around. Some additional information that I think you'll find helpful. But again, we typically go to Seeking Alpha, look them up, do a quick look through, some of the analysts. We're just looking for red flags, positive, negative, The analyst stuff, it looks okay. Some of it's relatively current, so possibly positive. And then, we look at the news and we can kind of see, well, why is it downtrending? Well, the last news was they guided revenue below consensus. So the revenue guidance back in October was below consensus, and it's been declining. So the decline's not terribly surprising. Again, hopefully, potentially a turnaround play. Then in the past, we can see they have a sizable dividend. We can see they've beaten expectations, beaten EPS, beaten revenue in the past in August. So the past performance has been good. Their guidance for Q3 was negative, so I would expect when they report earnings on November 3rd, it may miss expectations. It'll may be in line with revised expectations or may miss. If they miss and it drops, that may be a great buying opportunity. And so, so far our indication is this is maybe one we want to watch for a miss on earnings, irrational decline, a great buying opportunity for a turnaround play. Very possibly. We'll keep digging to see if there's anything that goes against that hypothesis, but so far it looks like that's something we want to watch for and take advantage of. We can see valuation's positive, profitability's positive, but growth is very negative. So again, their guidance was negative. So we see annual revenue's pretty flat, quarterly revenue again pretty flat. Okay, we can see their quarterly earnings per share. There's a little bit of a dip, maybe a bump up, Q4. If we look at annual, again, there was a dip, and then now it looks like it's uptrending into 2022. So again, this looks like a possible positive turnaround. Look at some of their metrics. See if there's any red flags. Don't see anything in their valuation, etc. Profitability, all positive. That's good. Dividends, dividend yield is about 3.8%. Dividend growth history, it has grown in the past. It looks pretty flat now, but stable, so that's good. Enterprise value, they do have some debt, they've got cash, a lot of institutional ownership. That's positive, that's a good thing. Institutions tend to hold, so again, all positive so far. You see some of the competitors. ELF is one to listen for. Sana. Risk Altman's score, this is an important factor we typically look at. We want that to be positive. That says they're solvent, they're stable. Beta is a little negative, so it's going to go a little bit inverse to its market, not a lot of shorts. Again, you have a lot of institutional ownership, so one would expect it to be pretty stable. Income, they make a lot of money, positive EPS, some debt, but their Altman Z score is positive, free cash flow looks good. So, indications here so far look good. We've on Seeking Alpha, it says 6 analysts, and the consensus is buy, and we'll see some other indications in some other sites as to what the analyst views are. So again, from our Seeking Alpha due diligence, things look okay. Don't see any red flags, so now we'll continue to dig a little deeper and see if this is something, again, we want to continue to consider for our watch list, consider for a near-term buy or a potential long-term investment. Okay, now let's do some due diligence in Webull for NUS New Skin Enterprises, and we'll use this as an example in a future more detailed video on how to do due diligence in Webull. but I'm on the Stocks tab. This is the online browser version of Webull, and as always, you can find our affiliate link to Webull in the description box below. Get 2 or more free stocks with your copy of Webull. So I brought up NUS. You can again enter NUS in the search bar up here and search for it in the stock screen. And I'm looking at a 5-year chart because I wanted to highlight this pivot point where we can see currently he's hovering around this long-term pivot point around this 40 mark. And that looks pretty attractive. We can see the bottom. We can see the next support level is also in this 26 range. And then we can see the resistance, the high in the 88.90 range. So again, it reinforces that it's approaching a pretty stable position. And we'll see what happens at the earnings report. So another nice feature in Webull on the stock screen is if you expand this right-hand tab, we can get some quick information about any stock that you happen to be looking at. So again, this is a nice helpful feature in Webull for doing some due diligence. We can see, okay, their earnings is on the 3rd, as we've mentioned. Here's the estimated EPS. We can see a quick view of the chart. We can close this tab. We can go to the bottom and bring up the bottom tab. And again, these are all features to do due diligence on the stock screen in Webull. We can see, recent news. Okay, we can read more about what people are looking at in terms of the earnings for the 3rd, earnings preview, etc. We can take a quick view at their financials here in Webull as well. Again, we can see another view. My opinion, it's always helpful to look at multiple sites, see if there's a consensus view, are they consistent, etc. We can see, their income seems to have been declining. They've also been beating estimates on income. Look at their balance sheet. Balance sheet's been increasing. That's positive. Cash flow, again, it's positive. And the earnings, they've been beating estimates. That's good. Financial ratios, our return on equity had a decline and is now uptrending. Again, all positive factors so far. We can look at their income statements. Okay, so they had this decline, and now the estimates, they again outperformed. We're going to see revenue. Again, it's similar trending. Operating income. Look at their balance sheet. All very similar. Looks flat. Cash flow, we can see, okay, that was their decline, their bottom, but now it looks to be uptrending. So again, all positive so far. We could again get another view of analyst consensus here. In Webull, it says they've got 5 analysts. It's a consensus buy. We've got another nice thing about this due diligence in Webull is we can see kind of a histogram of the analysts. So we can see most of them are hold. We've got 20% buy and 20% strong buy. So again, that's positive. And we can see a histogram of the price target. So the average price target is 40.15, which is that's the current price. That's where it currently is. So the average price target's 54, high end 70, low end 43. So if we go based on the analysts, we've got about a 30% upside. And we saw the support was in the 20s, so we've got $20 downside, $30 upside based on analysts. And you can see the support and resistance trends here in Webull. So again, very helpful. You can see press releases, corporate actions, when they declare dividends, etc. The ex-dividend dates. So the last dividend was in May, paid 38 cents. We can see options. It is optionable, so you could, if this is a long-term investment, you could write covered calls against it, increase your dividend yield. So again, I think this is very helpful for doing due diligence, the stock screen in Webull. Again, we'll probably do a more detailed video on this, but this is a good example. Okay, here's another great tool. As we promised you a new tool for some additional information for our due diligence that we'll probably use in all of our due diligence going forward is Chartmill. And we'll include our affiliate link to Chartmill in the description box below. But again, I think using multiple tools, multiple sites, to get multiple views on a stock to do your due diligence is always helpful. We'll use this due diligence in Chartmill on New Skin Enterprises as an example in probably a future more detailed video on how to do due diligence using Chartmill. But we wanted to share that with you now. Again, you can go to Chartmill using our link in the description box below. Just enter the ticker, any symbol in the search bar, and you will come to their initial profile screen. And you can see there's a great overview of many of the factors you want to consider in your due diligence for any stock. We can quickly see a technical rating, a setup rating, and this is kind of a unique feature in Chartmill that it gives you some input as to the current setup. So we can also see a quick view of the chart. Again, I'm going to go through this rather quickly just to get a feel for, okay, what's Chartmill's view on NUS in terms of, is this something we want to buy or consider to watch? Again, we can see similar metrics, similar data. We see analyst ratings, etc. And this is on the profile tab. Another nice feature in Chartmill is you can see we can quickly just click through these different tabs. We can see the charts very similar to FinViz, but again, another view. See moving averages, supports. We can get multiple views, daily, weekly, monthly, etc. So again, you can experiment with which of those views you find useful. Again, here's some unique features in doing due diligence in Chartmill. Is we can see technical analysis, so we can get a technical analysis rating and various key takeaways. So the technical rating is pretty neutral here. It's just 0. Well, it says bad. We know it's been declining. It looks like it's at a support level. It's pretty, again, pretty negative. But it's again saying this 40 is a good support level. Nice thing is we see the setup. It's saying it's 8 out of 10 on a setup. So it's saying, okay, in the current position, it's a good setup for a buy, a swing. And again, you can read all the red flags, Again, we know it's been declining. See all the trending, all the trends have been down lately. Performance recently has been down, we know that. But we're looking at this setup as a potential swing turnaround play going forward. So that's very helpful. And we can also look at their fundamental analysis. And again, this is a nice feature here in Chartmill. It says fundamental ranking is 6, so again, that's pretty positive. And this is kind of a nice graph. It can show you the features and shows green profitability, positive 6 out of 10, valuation 8 out of 10, growth 7. So here they're saying it's a positive growth. Seeking Alpha, the metrics there said it wasn't very good in growth. They gave it an F. So a health rating 4. That's kind of interesting that they're some of the metrics they're saying are not as healthy. And again, you can read each of these in more detail. We're just trying to go through quickly to get a feel for if this is something worth watching, buying. Dividends obviously positive. They pay a nice dividend. And again, more metrics information. So again, these analysis tabs seem to be kind of unique to the be on chart mill, and so it's just something we'll continue to use going forward. Analyst rating, consensus buy, 73%. They have, 3 analysts say buy, target price of 55. And in their case, they're saying only 3 analysts. Now, I think Webull said something like 5, and Seeking Alpha, or someone said 6 or so. So, again, you get different information in these different sites, so it's kind of useful to look at all of them, get a feel, and then make your own decisions. So here we can see historical information on the analysts. So again, useful information. And then again, you can go into more EPS estimates. You can dig into their financials. We've seen this information. This is actually their financial reporting, similar to what we've seen at the bottom of FinViz. Ownership metrics. Again, very similar to the graphs that we've seen in Seeking Alpha, but again, you can dig into more detail. And news. So again, I think this is great. These analysis tabs seem to be unique to ChartMill. And again, this is something that we'll probably do a more detailed video on how to interpret all this information. But I thought this was a great tool to add to our due diligence, to our toolbox of due diligence, and we hope you will as well. Again, you can find our affiliate link to ChartMill in the description box below. We hope you find this helpful. If you found this video helpful so far, please smash the like button. It will help us with the YouTube algorithm to share this information out to more of your fellow traders so they can benefit from it as well. So we really appreciate it. And now we'll do some summary and make a decision on whether NUS is a stock to watch, stock to buy, what we want to do going forward. Okay, as we mentioned, Nu Skin, NUS reports earnings on November 3rd, and we wanted to look at that article that we found doing our due diligence in Webull to see what factors do we need to focus on when they report earnings on November 3rd. So you can see from this article said they're likely to display year-over-year declines in both the top and bottom lines when it reports for third quarter on November 3rd. So suggesting a drop. So again, so far, we're expecting poor earnings on November 3rd, even though they've guided down, and we can see the discussion that they've guided down. Personal care, blah. Okay, so what do we need to focus on in this report? As you can see, in the past, they've reported that their third quarter revenues bore the brunt of challenges stemming from the Delta variant. So that was one headwind, and that caused their recent decline that we saw. It also says government-imposed restrictions disrupted sales in mainland China and Southeast Asia. Well, we saw they have retail stores in China, and that was a concern, and we see that has had an effect on them. They also encountered disturbances in promotional activities. Okay, so travel, disruptions in travels impacted their sales. They guided revenue down, so that explains the declines. And again, we can kind of expect this earnings to be bad, right? Now, whether the market reacts irrationally negative or just based on the previous guidance and it just continues to decline in the near term is hard to say, but that's why we want to be watching it very closely when they report earnings. Now, on the positive side, it looks like they're launching a new product. It has positive acceptance in the U.S. Also, they're doing advertising digital tools with Tencent in China. So hopefully their China business will improve. Again, new product in the U.S. So going forward in the future, these indications are positive. And again, their selling costs are going to increase. Obviously, they're going to be doing more travel, etc., as things reopen, assuming that's the case. So again, this sounds like a potential turnaround play. Again, the key is we're going to be focusing on their earnings on November 3rd. In conclusion, we're not going to act on anything until after we hear those earnings. We are going to put NUS on our watch list. Watch for the reaction to those earnings, and then watch for a stable bottom, and turn back up. Again, this looks like a turnaround play, potential long-term investment, pays a dividend. It has options. You can write a covered call against it to increase your dividend yield. Long-term, it looks positive. Short-term, obviously, is very negative, and we're not going to take any action until after we hear that earnings report. So we hope all this helps. Please let us know what you think of this video. What do you think of NUS? Do you have any experience with their products, their business, etc.? In the comments below. Again, provide us your feedback on this video. What did you like? What can we improve? And we hope that you like it. If you're not already a member of our BeachBum trading community, we hope that you'll choose to subscribe. Share this with your other traders to help them benefit from this information as well. So good luck. Have a great trading week. Bye. Thank you again for watching our video. We hope that you liked it. If so, please smash the like button. Give us a thumbs up. If you're not already subscribed, please consider subscribing to our BeachBum Trading YouTube channel. Please share this video with your fellow traders and friends. And please give us your feedback and any recommendations for improvement in the comments section below. And let us know what else we can do to help you in your trading career. Thank you again. Good luck and have a great trading day. So, if you did watch all the due diligence on Nu Skin, then you pretty much know the conclusion. If you did not, you skipped ahead. Our conclusion of doing our due diligence on NUS Nu Skin was that we want to add it to our watch list for this week. However, they have earnings on November 3rd, and we expect those earnings to be bad. They have guided down already, so the market should already know that they're going to be bad, but we may see an irrational reaction to it. So we're going to wait till after that earnings report on the 3rd to probably buy NUS, because we believe it's a long-term turnaround play. This is probably for a longer-term hold, longer-term investment. It is a dividend payer. They pay like 3.8% dividend. It is optionable, so you can write covered calls. So again, we think this is a good turnaround play for a long-term investment, long-term hold, long-term swing. But we're not going to take any action until after until we see the market reaction to their earnings report on November 3rd. So again, we hope all that due diligence helps, and we hope you benefit from us finding Nu Skin. So S Dow is the short of the Dow. We're going to continue to watch for all-time highs on the indices. We talked about, we might short whichever one looks the most extended. We're already long SPXU. We've also taken off the watch list O, or Realty Income. We got stopped out of the latest swing. It turned down. We made a nice profit. Congratulations to any of our other fellow BeachBum traders who also got a profit on that. It looks like it's turning down, and they have some splits coming up. I believe it's early November, November 1, 2. And so we want to see the reaction to that on O. So we're going to take it off the watch list for now until we see what all happens with that splits, etc. If it comes down to about 65 or equivalent after those splits, we'll go long O again. That's when we'll repeatedly swing. It's a monthly dividend paying REIT again that we really like, made a lot of money on over time. So Tate, okay, one we want to add is SOX, which is the short on the semiconductor industry. So we want to add SOXS, the short. And if we want to also watch the inverse of that for a top, it would be SOXL. So again, I'll just put those on there briefly so we can look at them. So there's SOXS, and again, the semiconductor industry's been running up, so we want to find the top on SOXL. It's still running up. When it tops, turns down, we want to short the semiconductors using SOXS. We're already long SPXU, as we've discussed. And we may even double down on this to lower our cost basis. It went down further, so we could lower our cost basis because we saw the S&P looks pretty extended. So, or we may choose to short one of the other indices. Again, these are hedges, potential taper tantrum hedges, and or just retracements on the indexes. So it may be just a scalp and or hedge to protect our portfolio against the taper tantrum, as we've discussed. So those are good strategies, whichever you want to approach to protect your portfolio. We're going to take Tate off the watch list for now. It's already run up. We're not going to chase it. We'll continue to watch it for if it comes down to support. You can see our previous due diligence video on it for further information. So for now, we're going to take Tate off. We're going to add TTT. This is the short on the price of treasuries, the 20-year treasuries, or it would be the short on the price, long on the yield. So if we get a taper tantrum and prices plummet and yields spike, we would expect a spike in TTT. If that happens, we would go long TTT. In the past, we've used TMB, and we found that the reward is a little better on TTT, so we're going to use that one going forward to short the price of the 20-year treasury, long the yield for the 20-year treasury. And again, this is a strategy for a potential taper tantrum on the 3rd. So the up Dow is the long on the Dow, and we'll use that to find the top on the Dow. UPRO is the up on the S&P. So again, we're using those to find tops in the indices. UBXY is the long on the VIX. So to try to find the bottom on the VIX. I've got the VIX in here just to be able to watch it. But another one that we're going to add to the watch list for this week is another new one, WYY. And this is Wide Point. It is profitable. It is also optionable. We can see it's got a kind of a support level in this 5 area, that pivot point around 507. So we're looking at that. They do federally certified secure identity management and communication solutions, and they're profitable. And it's pretty beaten down. So we're going to add that to the watch list as a potential swing. We can see it's got a support level there. So anywhere from 507, you can see to 487 is a previous low we're going to look at. So we're going to add WYY, Wide Point Corporation. to our watch list and see if that presents some opportunities, and maybe we'll do a due diligence video in the future on WYY. So those are our watch list updates for this week, the first week of November, the 1st through the 5th. Please keep an eye on the comments to this weekly game plan, and we will update them if we add or add anything to the watch list. If we do any buys, sells, etc., we will update them in the comments. Also, we will post as much information as we can to our other social media feeds. So in the description box, I will also include the links to where else you can find BeachBum trading on social media sites like Twitter, Facebook, Instagram, Pinterest, etc. And again, we'll post as much information out there, typically buys, news, etc., as we can to the other social media sites. But we tend to prioritize the comments, the weekly game plans for our YouTube subscribers, and also so we can have some dialogue so we can talk about it there. But please, you can also have dialogue on the other social media sites too. So we certainly hope this all helps. I know there's a ton of information. Please let us know, is this too long, too much information? If so, how would you recommend that we break it up so you get the information that you want that benefits your trading the most? Any recommended improvements are always welcome. Comments, etc. So again, we hope you have a great first week of November. We hope that you're ready for the taper tantrum should one occur, and have a great trading week. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week. Bye.